Good morning, traders and investors, and welcome to the weekend update on April 13th, 2025 with Steve Ganz. I just wanted to walk you through what a wild week this was. This is just absolutely nuts when you come and take a look at our markets here and you see what transpired during this week. So we can come in and we can see that at one point here, we got down as low as almost 4,800. And then literally 2 days later, we're pushing 5,500. That's almost a 14% swing in 2 days. Very abnormal. Of course, this was largely news driven. The news here was that the tariffs were accelerating and that President Trump was taking a firm stance there that we are not going to back down on our tariffs. And then the very next day, of course, he changed tune and decided to put a 90-day hold on tariffs with the exception of China. And that prompted this massive shoot up in our markets. It was like a coiled spring. Now, in last weekend's update, Trader Cat showing up. There's Trader Cat. So in last week's update, I did mention that I was anticipating that we could, in fact, get down to that 5,000 mark, maybe even 4,800. We did not quite get down to 4,800, but this whole gyration isn't over yet either. We'll have to see what transpires there. So this is a daily chart that we're looking at right here. Every bar here is a day. I want to go and I want to change this to weekly because as big as these moves are right now, I think we really need to look at this in a weekly setup, basically. So when we look at this chart on a weekly basis, you can see last week that 4,800, that's why I was saying that I thought 4,800 could be viable. And again, I think that if we do break that 4,800, we could certainly be down here in this range at about the 46. And I would even go so far as to say 45 is not out of the question. Again, everything is largely news-driven right here, right now. So it's really going to depend on what happens from a standpoint of predominantly tariffs. As we start going into earnings season in a couple weeks, we're going to have to see how companies' earnings projections are holding up as well. That's also going to be a big factor here. So right now I am neutral to bearish in focus, and that is because we have been making lower lows and lower highs. So we're still in what I would definitely call a downtrend right now. The tariffs are paused for the most part for 90 days. That doesn't mean that news on the tariffs is going to be paused. Of course, that's going to continue to fluctuate, and that will continue to potentially drive some of these chart patterns. So again, right now we're just looking at SPX and some big potential moves there. Again, one little word one way or the other, and it would not surprise me if we got right back down there to 5,000. I can't see a catalyst for going higher unless some big announcement came out that we solved tariff issues with China. If that were to happen, I think we could go a little bit higher there. But here's what I see as a problem overall right now, is that when the president, I'm not saying this is right or wrong, I'm just calling out the facts as they exist, when the tune can change as quickly as it has changed, maybe it's negotiation, maybe it's yielding to pressure as the market was collapsing, who knows. But the fact remains that if something can change that quickly, it becomes very difficult for corporate leaders to plan on anything. They all starting to spin up for handling tariffs and what are we going to do about the tariffs and how are we going to handle manufacturing, etc. Do we have to start building plants in U.S.? They start spending a lot of time and energy on all of these what-if scenarios, and then all of a sudden those what-if scenarios can be off the table again, and something new can come onto the table. So the environment is not what I would call stable if I was a corporate business leader right now, looking to bring materials in from outside of the U.S., trying to determine whether or not I have to spend the money to build a U.S. plant. all of these things are in large states of flux, and the stock market and corporate execs don't like that state of flux when they don't know what game they're really playing or what are the rules of the game and how quickly are the rules of that game changing. So even if we largely solve the tariff issue, I think just the sheer fact that there is uncertainty in the future if you're a large company, I think that's going to tend to lead toward probably a little more down move or some sideways chop. I'm just not seeing a big catalyst up move. I think we've got that at this point. So that's SPX. SPY, of course, is going to look exactly the same, so no real difference there. Take a look at VIX. Of course, VIX had really shot high here last week, which I would fully expect when you have that type of a massive move. And then VIX fell off a fair amount, but it did end up rebounding a little bit off of the lows in the VIX. So VIX is still pretty elevated there around the 40 mark. Obviously, it's come back significantly, but still fairly elevated. That's something that tells us that there's still some fear out there in the market, some uncertainty around the things that I just mentioned. Qs are going to have a very similar look to them as the SPY. And again, I had mentioned that the Qs could easily fall back here into this 400 range is what I believe I had called last weekend, which of course they came down, almost touched 400, rebounded from there, still making lower lows, making lower highs, so still downtrending at this time. Then the volatility for the Qs also, of course, spiked massively. Then they settled down a little bit, but then they also went back up a fair amount here during the week. So the volatility for the Qs is still pretty elevated as well right now. And notice the volatility for the Qs dramatically exceeded the volatility for the SPX. The SPX had hit some prior volatility highs or close to it. The Qs had a much, much higher volatility level than that previous mark. So there's more and more concern about the tech side of the equation right at this moment. And then if we look at the Russell or IWM, again, lower lows all the way down, lower highs all the way down, and volatility on Russell also remaining pretty darn high there, higher than, relatively speaking, even the Qs and, of course, the SPX. So volatility still up there quite a bit. So at the end of the day, I am neutral for the next month or so if we do, in fact, tend to not have any major news surrounding tariffs or other things that throw the corporate environment into a tailspin, to slightly bearish because I do think there is other news. Maybe it's tariff news, maybe it's war-related news, maybe it's China ramping things up even more than what they have. There is likely to be lots of turmoil, which I think creates uncertainty, which of course the market does not like. So getting back to those prior lows that we had, I don't think is out of the question in the next 3 to 4 weeks. So I am sideways to back down, touching on those prior lows in my expectations and predictions in the coming weeks. So thanks so much, everyone, for stopping in for the weekend update. If you find this information helpful, please subscribe, give me any comments if you would, and I'll look forward to seeing you next weekend. Now, those of you that are interested in the alert service positions and or part of the alert service, first of all, I'm going to put on the screen here right now the link that will tell you a little more about the alert service. This is where I share all of the trades that I am making for students. These are specifically trades designed to help people understand how the options market works. My goal is to share trades, predominantly butterflies. Butterflies tend to be my favorite trade, particularly in volatile markets. I'll also put a link down below right now if you want to know why the butterfly. Go to that link, and I've got 7 reasons why the butterfly is my favorite trade. It's a free video, about 15 minutes long, that will help you preview and understand why I think the butterfly is a great trade. particularly in these types of markets. So that said, these are the open positions in the alert service right now. So this particular trade here started off as basically a calendar trade, a short-term calendar on one of those days that the Qs were highly elevated. Calendars and diagonals are also excellent trades. That's probably my second favorite trade. I'll put a link on the screen right now also to the calendars and diagonals so you can see more about that particular class I offer if that's of interest to you. I use calendars and diagonals a lot for earnings trades, and I get into why in that 10-hour plus class. So this butterfly, I've only been in this butterfly for 2 days right now. Got a good entry on that butterfly. I like where that's set up. This is a shorter butterfly. This one's only 14 days at the time I entered it, 12 days left on it. So it's going to decay fairly quickly. This T0 line is going to start mounding up fairly quickly with some time decay. And my goal is if the market chops sideways here a little bit in about 150 to 200 point range, I should be able to pull that trade off for about a 10% profit, maybe sometime this week. This butterfly is a much, much longer dated butterfly. I've been in this one 18 days. And this one had to be adjusted to accommodate that massive down move that took place here a few days ago. So this butterfly started off more as an upside broken wing butterfly like this one. And then when the market shot down as hard as it shot down, I had to make some adjustments and reconfigure this butterfly in this format. So now I'm looking for decay to happen. That T0 line is going to move its way up here. And what I'm really looking to have happen on this one is I'd like to see a continued down move a little bit. And if I get some down move with higher volatility, I will add in a put spread down there to bring additional premium into this trade. So those are some of the things that I'm looking for on existing open trades. This trade right here is in Lucid, car manufacturer, Lucid Motors. There was some news out on Lucid this last week. They, in fact, ended up buying a lot of the manufacturing facilities from the electric truck company, Nikola, that went bankrupt. Some people like that. Some people didn't like that because Lucid has been spending a lot of money anyway. They are backed by the Saudi Prince Investment Fund, largely, as well as public people like myself who do own shares of Lucid. And in the next couple of weeks here, next 4 weeks probably, I need to start seeing some upward movement in this position. If I don't start seeing some decent upward movement, I've been in this trade now almost 50 days. So if I'm not seeing decent forward movement in the next probably 4 to 8 weeks, I'm going to have to reevaluate that particular position. So right now, those are the positions that are open. I usually carry 3 to 5 open positions. I'll be looking to potentially add a new position this week as the week develops. If we get a little bit of a pullback in the market, I could very easily take this trade off probably for some profit. This one may be able to come off later in the week for a little bit of profit. I would look to reopen a new potential butterfly at that point if we get a pullback to an area that I think we might stabilize or rebound from. If we get a move up in our markets to an area where I think we might stall, I also have a butterfly for that. I tend to use a flat fly in that particular situation. Again, if you want to know more about that, follow the link below to see the 15-minute explanation on the butterfly and the 7 reasons I consider it one of the top trades out there for professional traders looking for income trading. So again, if you like this, please subscribe, give me any comments below. And thanks so much for stopping by, everyone. Take care.